Happy New Year to you and your family. I hope everybody had an enjoyable holiday season and you got to spend some time with family. Maybe you got to go away somewhere or spent some time around extended family, things like that. Things that we hadn't been able to do in the past couple of Christmases, so hopefully you did. I was fortunate enough I got to go spend some time away with my family. We got to get some sun. And now we're back to business in gray skies of Ontario for winter in Ontario. So let's get used to that for a little bit. But as they say, sunny days ahead. So let's look forward to what spring is going to bring, and let's hope things look sunnier going forward. Let's talk about what happened in Oakville real estate in December of 2022 to wrap up the year. So I've been tracking statistics on a monthly basis for Oakville going back to January 1st of 2017. So I know what's going on out there. I watch it pretty carefully. And the one thing that stood out to me this month, going all the way back, that's 6 years of data that I've been tracking, this is the first month in 6 years that we had less than 100 residential transactions take place in 1 month. We had 98 transactions happen in December of 2022. That is the lowest that we've been, at least 6 years. The lowest point previous to this was December of 2018. We were at 121 transactions. So we're still 20% below where we were back in 2018 today. 2018 was a different market. Obviously, we were coming out of that 2017 drop when the government put in place the foreign buyers tax and they changed the qualification rules to implement that 2% overage that you needed to qualify on a mortgage. So that was what happened then. Obviously, we know what's going on today with everything changing with inflation and interest rates. 7 interest rate hikes in 2022 from the Bank of Canada. Obviously, that's all taken a toll on real estate and where we are today. Biggest thing, though, for me was that drop in the number of units selling. Only 98 residential units transacted last month. Now, that's down 41.7% from December of 2021, in where we had 168 transactions take place. So you can see a significant drop in activity there, 70 fewer homes traded hands. Now, from a price perspective, if you watch the news and the media and you listen to what's going on out there, you're going to hear the sky is falling, market's down. Real estate reported by CREA, which is the Canadian Real Estate Association, which reports on activity for all of Canada, said that the average price of a home is down 15% in 2022. That's the number that they've come out and posted. Now, if you look back over where we were, 2021 going up, we peaked February, March 2022, and we've been on a downward since then. So again, two things that you want to take into consideration. They're looking at an entire year over year, 12 months versus 12 months. Well, those peaks and valleys happened at different times and impact those years differently. Secondly is the mix of homes that sold in and amongst that, and you're looking at a country. So you're looking at everything across the country. Markets like Toronto and Vancouver have been impacted, and they're the two largest markets in the country. But if you break it down and see what's happening, you know, cities and more importantly, neighborhoods, you'll see things haven't changed so much. So here's something I want to tell you about that kind of validates what I'm saying. I track 4 categories of homes, okay? Detached homes in Oakville, year over year, were up 6.4%. Semi-detached homes are up 2.3% year over year. Townhomes are up 7.2% year over year, and condominiums are up 13.8% year over year, and that's in price. So think about that. I told you earlier that we're down 6.2% year over year for Oakville, but when I just break down the categories, forget neighborhoods, just categories, every single one of them was up. So how could they all be up and Oakville be down? The reason being is the mix of homes that are selling. We had fewer detached homes sell as a percentage of overall sales, which are at higher price than we did condominiums. Average condominium price was $837,000, and that was up 13% from a year ago. The average detached home price was $2,075,000. So you're talking almost, what, 150% higher than a detached home? A detached home is almost 150% more than a condominium. And as a percentage, we have more condos sell year over year than we did detached homes. So when you take that into account, even though we had more homes sell, less homes sell, the mix is different and it will drive down that average price overall because more homes at a lower price sold than homes at a higher price sold. Okay? So I hope that makes sense to you. Now I want you to think about that from a neighborhood perspective. I gave you the numbers for Oakville. But if you drill down into the neighborhood, so if you look at your community, if you live in Joshua Creek and you look at Joshua Creek, the aggregate of what those homes in that neighborhood sell for are pretty flat versus going to be so up and down. We don't have $10 million homes in Joshua Creek and $1 million homes and detached homes in Joshua Creek, they typically range anywhere between $1.5 million upwards, we'll say, to about $3 million. Yeah, we get some that go over and some go below. But the average home in Oakville is probably going to sit somewhere between that $2 to $2.5 million price point, within Joshua Creek. Now, if you go down the road a bit to the west and you go to West Oak Trails or you go to Westmount, the price point there is going to be lower. They're going to have a higher mix of townhomes and detached homes versus detached homes. They're going to have a higher mix of semi-detached homes in those neighborhoods. That's going to impact what the pricing look like there. So if you drill down in those neighborhoods and look at those home types, you'll see the same thing I'm talking about there. The pricing hasn't changed as much within the category. All right. So the neighborhood may have changed, but the category mix is going to be a bit different. So you want to look specifically what's selling and how much they're selling for. If you're selling a detached home in Westmount, the pricing there has changed X amount, but all the homes in Westmount fall within a tighter range than all the homes in Oakville. Oakville, we've got homes from under $1 million to over $25 million. All right. Westmount may have detached homes that range from $1 million to, say, $2 million. So that range is much tighter. That's why you want to focus in on what's happening in your actual neighborhood. So as much as the media is going to tell you the doom and gloom of how bad the market's doing, in my opinion, it's not doing terrible. Now, that being said, there are some homes out there that have sold lower than the peak price. The peak happened in February and March. That's when the peak happened. Okay, we had homes that were selling up in that $3+ million range here in Joshua Creek that today are going to sell below $3 million. Okay, supply and demand. So check it out, look at it, understand what's what. In this type of market, which is flipped right from a seller's market to a buyer's market, features and benefits of your home are going to make a big difference in how people, what people's interest is in buying your home. So you want to look at things like that and how your home is presented. But for me, looking at year over year, if you look at a total number of what's happening out there, it's going to be very deceiving versus if you get down and look at it on a micro level on the ground. So it's important that you drill down in your neighborhood and see what's happening. Now, why is this important? I'll tell you this is important, and not because you're buying or selling a house today, okay? This has nothing to do with buying or selling a house today. This is how I look at things. So I look at my personal investments, I look at my stock options, I look at my stock portfolio, and I look at my mutual funds, and I look at all of those on a monthly basis for the most part. Some things I might get lazy and look at them on a quarterly basis, but for the most part, I review all of that on a monthly basis. I want to know where I stand and where my investments stand. Well, my home is the biggest asset that I own, okay? So it's a part of my total financial portfolio, and I want to know where it stands. I want to know what my equity position is, because at some point in my life, down the road, we're going to downsize. We have one child. She's in high school. At some point, she's going to graduate high school, and she's going to leave the nest and go off to university, and we're going to have to make a decision. Do we want to stay here in this big home, or do we want to downsize to something that's a little more manageable for us? So that becomes a part of our decision-making on what our future is going to look like. Okay, that's part of the equity that ties into what my future plans are. So it's important for you to know as a homeowner, what's your equity position on your home? Where do you stand today? So I'm not providing this information to convince anybody that it's time to buy or sell your home. I'm providing this information so you know what's happening with your type of home and your type of neighborhood, so you know where your equity position is, okay? Now, that being said, if the time comes that you decide you want to either work on your plan for the future, you want to look at possibly selling your home or upsize, downsize, whatever that may be, I would love the opportunity to help you with that. So that's not the sales pitch here today. I'm not here to do that. What I'm here is to educate you on what's happening in the market. So I'm going to do a separate email, a separate message that's going to talk about Oakville as a whole. And I'll actually break down the neighborhoods and show you what happened in your neighborhood over the 2022 year period. So you know exactly where you stand in the sense of your neighborhood, how much it changed over the year. But I want to talk about going forward and where we are and what's going to happen in the future. Now, for me, I think we've got another quarter point coming at least, if not a half, but I'm hoping maybe just a 0.25% interest hike is going to come on January 25th when the Bank of Canada has their next meeting. Hopefully, and they shouldn't be doing that today. We should be done. The Bank of Canada should not have to go higher than where they are today, but I believe that they will simply because they just aren't bringing inflation back down to where they want to be. We're still over 6% for inflation. They want to bring inflation under 2%. I don't think they can bring it down fast enough to get it to 2%. I think they'll probably settle in somewhere around 4% is where they're going to be okay. But for now, we're still pushing close around that 6% mark. So I think they're going to go up another quarter point. The fact that we had 100,000 new jobs added to the economy in December certainly doesn't help that case when that announcement just came out, because they were expecting 8,000 new jobs and we ended up coming in at, I think, 104,000 new jobs. You can't be in a recession when you have a growing economy. So the next biggest announcement coming out that we want to pay attention to is going to be what the GDP numbers look like for Q1 of 2023, which we won't see till probably the middle of April. Now, if this is the last interest rate hike that we see from the Bank of Canada for some time now, I think what that'll do is it'll start to bring some stability back to how people think about buying homes. Because today, buyers are out there, they're looking, and I know that because I track certain things like Google activity. So I track certain criteria to see what's happening out there. And searches, for example, searches on Oakville real estate on Google are up 26% from where they were just 60 days earlier. So December numbers on searches for who's looking at Oakville real estate is up 26% from people that were looking back in October. Now, we don't have a crystal ball, but this is kind of a precursor to look at what's happening out there. So if you see that kind of activity jump and it's up and it's trending up, that means you have more buyers out there looking at the market. You have more sellers out there wondering, I wonder what's happening out there in the market today. So these are all kind of precursors to what could possibly be coming down the road. None of us know. We don't have a crystal ball. So I think the next 6 months will probably trend fairly flat for where we are today. I don't foresee prices skyrocketing at any point in the near future. I don't think we're going back to a 2020, 2021 kind of push-up market where we jumped. We jumped 48% from the beginning of COVID to where we peaked out in February, March 2022. 48% home values went up as an average. We've come down now. Oakville's come down about 12% as an average number across Oakville. I think we'll probably settle a couple more points below where we are, but I think the biggest changes have already happened. That incline, though, will become very moderate going forward. I don't think you'll see any large ramp-ups. I think it'll be more of a gradual pace that we've been used to from previous years. So that being said, you want to look at what your plan is. If 2023 is the year that you decide you're going to be buying and selling your homes, well, what should you be thinking? Should we wait? Should we be looking at the market now? Should we wait for the spring market? What should we be doing? So my advice is, I think there's going to be an abundance of people coming back onto the market once that spring market starts to kick in, which we're assuming is going to be somewhere in that April-May period. So if you are thinking now start to put your plan in place, okay? Doesn't mean you got to go out there and list your home today or anything like that. Although if you beat everybody else to the punch, you have less competition to deal with. We still have a supply issue today. So even though sales are down dramatically, our supply levels are still half of what our historical numbers are. So when those buyers start to come back, all of a sudden, our supply is going to be squeezed again, and we're going to be right back to where we were in the sense of not having enough homes to fill those demands. So will it push pricing up? No, I think it'll actually make buyers sit on the sidelines and wait. I think that appetite to overpay for homes has faded. I don't think people want to go back there, and I think it actually put a bit of a scare in people what happened now with interest rates going up 7 times in 2022. I think people that did go out and buy, and all of a sudden their payments went up $1,000, $1,500, $2,000 a month, and they were already overextended. I think those people kind of learned their lesson, and I think enough people have heard stories about that they don't want to put themselves in that predicament. I certainly know from the buyers that I've been talking to that they're not looking to jump into that kind of scenario. People don't mind paying good value for a home and riding out this interest rate storm, but I don't think people are willing to risk the way they did back in 2020, 2021. So again, I don't think that's going to create that. I think that's going to avoid that push up on the price value again. So from a buyer perspective, if you are looking to upsize, downsize, move, when should you do it? Well, you certainly don't want to be back into a competitive situation. Most of the buyers that I've been working with, what I hear is that we're not interested in competing. We don't want to be in multiple offers. We just don't have an appetite to deal with that. And I completely respect that and understand the reasoning behind it. So the next part to that is when should you? You should be looking at the market today wondering when it's time to jump back in and when you're ready. And that time is not any other period in time, but when you decide that your comfort level is there and you're ready to make that move. Again, I'll go back to that plan idea. You need to have a plan in place on what you want to achieve. So for me, it's helping you understand what your home is going to be worth, what your home you want to buy is going to cost you. And then let's start working and measuring that differential, because that becomes the difference. Whether you're upsizing and you want to minimize that differential to move up to a bigger home, or you're downsizing and you want to make sure you put as much money in your pocket as possible. All those things are factors you got to take into consideration. You also want to keep in mind that the government of Canada has been pushing immigration here. We need more people to sustain our economy, to grow our economy. And quite frankly, with the number of baby boomers that will be retiring over the next 10 years, the only way they're going to be able to fill these jobs out there is to bring more people into the country. The great thing about what they're bringing into the country, or about bringing more people into the country, is more and more of these people coming to Canada today are coming in with money in their pocket. They're coming in educated. They're coming in work ready. They're coming in a position that they're going to become homeowners much sooner than my parents or your parents or anybody like that did when they immigrated to the country many years ago. So you want to keep that in mind. The government of Canada had 480,000 as a target for last year, and they missed the mark. So we're expecting that number to be 650,000 immigrants, based on what they're saying, moving to Canada in 2023. 80% of those people end up in the Golden Horseshoe, and they all need a place to live. Okay? Now, they're not all moving here tomorrow and buying a house tomorrow, so I don't want you to think of that. But think about the amount of competition coming into the market. Okay? Think about the number of buyers coming into the market and what that's going to look like. The other factor I want you to think about is builders. As much as we need more houses built to fill that supply issue, builders have taken their foot off the gas because their prices have come down. Look what happened with the project up in Brampton with Paradise Homes, where they can't close on the homes they bought 2 years ago at high prices, and they can't get the financing to close that now. And the builders are not being flexible on it, okay? Where I've seen the biggest impact there is builders don't usually like, or a lot of builders don't cooperate with real estate agents, okay? They prefer to have their own sales centers with their own sales force, and that's how they operate. However, I've been receiving almost daily emails now from builders who are offering commission splits to realtors to bring their clients. So we've got a complete flip from where we're not interested in working with a realtor. We'll do our own deals to bring your clients. We're ready to cooperate. Now, why would that be happening? Well, it's because sales have dropped in the pre-construction component, and they're letting their foot off the gas in the sense that we're not going to build what we haven't sold. Therefore, we're going to go out there and ask the people that actually sell houses to bring their clients to us. If you think back a year, 18 months ago, any building site you've seen around here in Oakville that had a release date of when they're going to start selling that project, you have people lined up out the door 500 deep to buy 30, 40, 50 units that are for sale, okay? That's not happening today, okay? You're not going to see that 500 people lined up to buy pre-construction homes when there's only 1/10 of the inventory available to sell for a number of people that are looking to buy. The other thing to keep in mind, effective January 1st, was the ban on foreign buyers. So anybody that is not a landed immigrant, permanent resident, a student, like there's all kinds of different disqualifications here, but anybody now that's living overseas that is not a Canadian resident, who's deemed a foreign buyer, have been banned for buying for 2 years, minimum 2 years, okay? So those people are completely off right now. They are a big buyer from an investor perspective of pre-construction projects. So all those things are going to come into play going into 2023. It's new ground for us. It only came into effect 2 weeks ago. So we don't know exactly how that's going to impact things, but it's certainly going to have an impact because you've just taken foreign investment out of that real estate market for the next 2 years. So there'll be an impact there as well. So a lot of things happening right now in real estate. Lots of good things happening. Lots of not so good things happening, I guess, if you want to look at it that way. I don't think there's a lot of bad things happening. I just think there's some different things happening. But it's definitely most important today to know what's happening, because it's going to affect what your plans are for the future. It's also going to impact the equity you have in your home, and you want to know where you stand in that position. So hopefully this has provided some insight to you. Dig down into those numbers, click on that link and find out what's going on in your neighborhood. If you want to chat about it, if you've got some ideas about or want to know some things that are happening that I haven't covered, if you want to know something specific about your neighborhood, or if you want to know exactly what your home is worth today, I'd be happy to do a CMA for you. So there's no pressure from me on anything. I'm just trying to be a resource today. And if you find me worthwhile to work with, or you enjoy the information I provide, and one day you do decide to sell, hopefully you'll consider me, or you'll refer me to one of your friends or anybody out there that may be thinking to sell. That's all I'm looking from you today. So no pressure on my end. Hopefully you found this informative. I'd love to have our next conversation sooner than later. So if there is anything you want to talk about, please feel free to reach out to me anytime. And until our next conversation, have a great week and a great month, and we'll talk soon. All the best, and all the best to your family.